Howdy folks, let's do what we enjoy the most, looking at the charts. It's Sunday and we've got a busy week coming up ahead. Remember, it's not like I need to remind you. Tuesday week is the US election. It's always really difficult trading in election years, and there's a lot of emotion involved, not only in the politics, but it spills over into everything that we do, including the markets. So bear that in mind and don't expect anything to make sense in the markets this week, because it probably won't. I expect we're going to see a range choppy sort of market, and perhaps when I say choppy, I mean more than just choppiness, but huge swings relative to normal day trading sort of ranges. So that's what we can expect. I'm not sure if that's going to play out. Maybe we'll just get a gradual trending market across all the markets. Probably unlikely though. Let's have a look at currencies. I think the main chart once again is the dollar index, and I've been pointing this out for some time, actually weeks now. We've reached this area underneath this rising trend line and into this order block, and just below the 78.6 and the 61.8% Fibonacci levels. We reached there a couple of days ago, and you can see it's a very long-term line. We've had a couple of touches. That's not really a touch, but one there and one or two at the top. So sort of a channel, but squeezing in. It's actually a reversal channel, and we've broken down through the bottom of it and retested the top side. There's the breakdown, the pullback, the retest. The question is now, what's going to happen here? I expect that we will pull back. The dollar is overbought. It's been unidirectional for quite a long time now, since the end of September, and we're at the end of October now. So I expect that we'll try and turn around here. And once again, remembering this is all in the context of an election week, and not only any old election, but a very, very, very difficult and fraught and emotional type of election. So the dollar is intimately involved in this, as is the stock market and all the markets actually. So let's see what happens here. We did perform a bearish engulfing candle on Thursday. You can see that candle there. The body of this bearish engulfing candle completely covers or engulfs the body of this preceding bullish white candle, the one that touched the channel top into our blob, and we've retraced just back into there. Let's have a look at this on the shorter term chart very quickly. This is not the type of chart I normally trade off, but let's see how far we retraced into that movement downwards. And let's put a little Fibonacci retracement study on there, and you can see we pulled back exactly 61.8% of the move from the top down, 618, and that's where we should turn around. That's the golden pocket. Let's get rid of that short-term chart, go back to the day chart, and that's what we're looking at on the day chart. So the 15-minute chart describes what we're seeing here on the day chart. We've still got a very good chance of this moving down. As a result, we've taken long positions on the euro and the pound and a short position on the dollar yen. I would call this failure to launch so far. We're still trying. We've got 3 long positions. 2 of them are out of the money, one's in the money. Remember, we're swing traders, so I don't mind holding on or dollar averaging into a position. That's part of the strategy. We use hedging and DCA and all sorts of other tips and tricks in our swing trading. Let's have a look at the pound. The pound has actually fallen down to this trend line. There's the 50% retracement level, not a Fibonacci. I'll keep on saying that. People keep reminding me. 50% is not a Fibonacci retracement number. It just fits into there quite neatly. So we came down 50% of this last recent rally. We did break down below that trend line and the 100-period moving average. You can see we reclaimed that on Thursday, and Friday we held it. So still looking okay for the pound. We're long on the pound, slightly out of the money on that too. But that's okay, because I've got my eye on the dollar index, and I continue to think that we need at least a pullback. If this is not going to carry on moving down, we'll probably get a retracement. We're also short on the dollar index. We're also short on the dollar yen for the same reasons. And we've got a position from there and a position from there. That one's slightly in the money. That one's a little bit out of the money. So we'll continue to monitor these. We've got our hedging options set up and available to us. And if these go against us, we'll simply adjust our strategy. Now, on the NASDAQ and the S&P, as you know, if you've been watching my videos, we've been short for some time. And there are our positions on the NASDAQ. And I'd probably refer you to my last video on this, because I've been repeating the same thing over and over and over again for days, if not weeks, maybe even months. Notice that we've been trading sideways for the best part of 6 to 7 weeks now. And of course, we're probably likely to continue to move sideways going up into the election on Tuesday. We've also got the jobs reports next week. That's another thing to bear in mind, the non-farm payrolls. Let's have a look at the S&P. Very similar sort of thing, except we're in the money on this one. We are 2 short positions from up there. But all of these just butting up against these rising wedges, these ascending triangle type patterns. We've got divergence on the oscillators, the stochastic, the RSI, the MACD. We've got rising wedges, and we're running out of momentum. We're near the Bollinger Band tops. We're underneath these sort of rising trend lines and channel lines. So it's definitely not looking very bullish. And of course, Friday's market reaction to try to make a fractionally new recent high on the NASDAQ, trying to get up through there on the S&P, both failed. We saw the US 30 failing on Friday too. We saw Nvidia trying to just get up, maybe try and make a new high, but failing there. Reversal candle on Nvidia, IWM. Tesla booming up through there. We still haven't got back into this yet, but I want to carry on buying Tesla. We took our profit underneath this red order block, and we still haven't got back into that. And then one or two other things XLF we're short on, fiddling around there. Now let's go across to gold and Bitcoin. We're actually short on gold, as you will have seen from my last video and my last updates on X. But we did move above that swing high and that one up, one down candle, and through this Fibonacci retracement level. We're up at the 786 now, and this is the point where we need to reverse or hedge. So we've got a very tiny position on this. We're pretty close to our entry point, but if this does keep on moving higher, I'll have to consider hedging that. But I'm keeping in mind that I'm still long on Bitcoin and platinum. So the short trade on gold is hedged by my long position on platinum and my long position on Bitcoin. I'm trading these all in the long direction at the moment, or that's my thought. So we'll see how we go. My general idea is all of them long in the sort of medium-term swing direction. This very tiny short gold position that I've got on is kind of based on the charts on gold, but also kind of a hedge against the potential possibility of these markets sort of downturning and swinging around as we lead into this coming week of elections. So we're still basically positioned long on metals and Bitcoin, very tiny position short on gold, much bigger long position on platinum, and a much bigger long position on Bitcoin. I'm not trading silver at the moment. I'm not too sure how this is going to pan out. Silver is also not only an investment type metal, if you consider that to be that, but it's also an industrial metal, heavily used in electronics and batteries and all sorts of technical electronics and other things like computers. And any industrial downturn or economic downturn will have much more of an effect on silver as it does on copper compared to some of these other more purely investment type metals like gold and maybe platinum. Platinum also has industrial uses. And then someone also asked me about palladium while we're talking about platinum, the platinum group type metals. And I'm not going to cover that today. I'm not going to put the chart up, but I did cover that in the live stream. I think there's some hope for palladium at some stage, eventually now, perhaps with a resurgence of ICE cards as the elections approach, and more of an emphasis perhaps on oil and natural gas than there is on green energy going forward. So maybe there's a chance to put a bit of a bid on palladium, and I've put in the last live stream, I put the sort of technical levels that you might want to look at. Natural gas and oil and uranium still have no positions on URA, looking to buy those on dips much lower down, perhaps down to 6.65, maybe 7, 6.8, somewhere there on UEC. And then URA probably back down towards these moving averages, definitely looking to get back long on this, not just yet, perhaps down here at the 200 period moving average, a little bit of a dip down, and maybe even slightly lower into the sort of 27s and 28s. Essentially, I'll just be looking for price action on the 4-hour, daily, and even weekly charts to get back on those long trades. Natural gas, we're still long. We've rolled over actually on my broker's chart. I'm not going to cover natural gas in too much detail in this particular video, but I will do another video probably early tomorrow morning on natural gas. But basically, we're still long. My entry positions are at 2.22. I haven't got a long position on the futures yet because the Henry Hub rolls over on Tuesday this coming week, exactly 1 week before the elections. So I'll be looking at my futures positions then. But in the meantime, I've got a long position from 2.22 over here on the Pepperstone continuous price, and you can see that's looking good. This is way below the futures current price and the December contract futures price around about $3. This is trading at 2.5, 247. Plenty of opportunity for this to catch up if the futures don't suddenly collapse. Looking at this on the day chart, it looks pretty good too. So we've definitely started a medium term or a swing uptrend. We've got the 20 period moving average above us on this day chart. We've got to get through there, but we're above all the others. There's the 200, the 50 and the 100. Holding above there beautifully after we burst through the 100 and the 50, retested from the top side, back into that confluence of those two moving averages, a bounce off there, and then a resumption of the trend. A little bit of a danger here. We've got to get through the 20-period moving average. It's funny that the short-term moving average is above all the longer-term moving averages, also actually denoting an uptrend. We're still short on oil, not trading Brent crude, but WTI. Really, there's not much else to add to this apart from the fact that we've got our short positions all drawn in here, and I'm looking for this to move down into the low 60s and then possibly into the 50s, probably actually into the 50s. Once again, with this election cycle coming up, and the likely or more likely outcome right now is a Republican win, and that will mean probably lower oil prices and potentially higher natural gas prices. More LNG exports and more drilling, basically, is the strategy, if that's the way this election plays out, which we don't know for sure just yet. Just looking that way at the moment. So natural gas I'm remaining long and WTI I'm remaining short, and I'll adjust those positions as needed as this week begins. We roll over in a few hours' time. It's Sunday night now. Be interesting to see how this moves. We have not yet pulled back after that futures rollover on the Henry Hub on my broker's chart. But let's just switch over to the Henry Hub price and quickly put this up. So here's an NYMEX 4-hour chart. Let's switch this to the day chart directly from the NYMEX on the Henry Hub price. There's the triple bottom, pullback, 786, squiggly line, bounce, double bottom, and a move up. And now resuming and starting a new uptrend here on the Henry Hub. We have not yet rolled over on this price. The rollover is on Tuesday. We roll from the November contract into the December contract. We know that's trading at around about $3. And right now, we're at 255.56 here on the futures on the November contract. On Tuesday, that'll roll over up into this top region here. And depending on how the market views this, that new futures December contract price will begin to trickle down. That's the way it kind of looks at the moment. If you look at the COT report, which I've just covered in my Swing Trading Blueprint course session for this afternoon, if you are thinking of going long, I think we may begin to trickle down on the new contract in December. However, I'm trading this on the spot price at the moment, not on the futures, waiting for that rollover. And on the spot price, we're still way below the futures price by about 53 cents. And I don't expect the futures will roll back all the way down to where we are here. It's possible though, I'm not ruling that out. I'm hoping for this to move up a little higher so I can take some profit. Right, so because we've taken so much time, I'm not going to cover the Rand pairs. Just to say I'm looking to sell the dollar against the Rand up into about 18.3 around here at the top of this block. Let me just show you very quickly. Up there somewhere at the 200-period moving average and underneath this channel line where my blob is there. You can pause this video and have a look at that. Same thing on the pound rand, same idea. We're long on the VIX, and that's just ticking up nicely actually on Friday, and I expect this will continue if those markets continue to dribble down. But remember what I said about these elections coming up this week, or Tuesday week, and the fact that we may have just very spiky, messy, almost untradeable markets, unless you're a day trader, when you might be looking for those day range swings. We're long on TLT, and that's just being fairly miserable at the moment. I'm still happy with that position. I think that'll tick up. And then going across the softs and grains, not much to say really, except to say the two instruments here that I'm most interested in, cocoa. Except to say cocoa, we're looking to sell into any rallies. We've taken our profits on both of these short positions now. I took some more profit last week down here at the bottom. We took profit at that black line, and our two positions were there. And our two entry positions were from there and from there. I'm looking for a little bit of a bounce back up, perhaps up to the underside of this trend line, up to about 8.5, and maybe even back up to the underside of this downward sloping top of the triangle at about 9,200 or 300 or 400, somewhere around there. And the other one, which is slightly disappointing on Friday, was cotton. And I'm still long on cotton. There's my entry position, looking for this to hold and continue to bounce off this red line, this pivotal swing up and down line. We've got a short position on orange juice, long position on wheat, not going anywhere right now. And we're long on soya, that's dipping down a little bit again. Hopefully that'll pick up. Nothing on sugar, looking to buy sugar into dips again. Okay folks, and the only live chart that's going on right now is Bitcoin. Let's have a look at that before we leave. Let's see where we are. And continue to buy Bitcoin. There are our long positions. We took another small long tranche on this dip down during last week towards that breakout area once again, down to that trend line. We've still got to convincingly hold above this long-term channel line. Let's have a look at the day chart. But that all looks fantastic. We've got a double bottom against this triangle breakout. There's that last blob where we entered. There's the 20-period moving average. There's all the longer-term moving averages down below us. a longer term channel line. We've got to get through there once again. We've held above there a few days in a row now, but last week we just failed back beneath it again. With a bit of luck, we'll just push up through there. Looks quite good. Nice, almost tweezer double bottom against the 20-period moving average here on Bitcoin, and that looks okay. This chart's live at the moment, so it still looks quite good, even for a low volume weekend. If you've enjoyed this, I hope you give this video a thumbs up and a subscribe. I'll see you in the next video. And watch out, on Monday, I'll be doing a dedicated natural gas video, so keep your eye peeled for that. Click the notification bell if you want to be alerted. Speak to you soon.
Stock in hand, feel the thrill. Commodities, the deal's the steal. Buy dips, let it rise.